Hey guys, it's Simon with Trade and Perform Coaching, and wanted to start covering some basic concepts of the room. Several people have been asking, what do the signal means, or how do we figure things out, or what are the basics to kind of help with trading decisions. And so this is going to kind of be the beginning of probably a multi-video series that I'm going to post up, and I'm going to try to keep them short and sweet so everyone understands what we're looking at. Tonight I'll do two videos. This is going to be the first of two videos. And hopefully that will, hopefully that'll help some people out. Brenda specifically had asked a few questions, so I'm going to try to start that out tonight. So here we go. So before I get started, just real quick, if you'll read this disclaimer, I'm going to leave it up there for 5 seconds. There we go. And let's get into it. So the first thing I want to talk about is the concept of getting underneath the last wave to a high or the last wave to a low. And it's important. The reason it's important is it shows you where the entire concept of day trading is finding where your trap buyers and your trap sellers are, right? So I'm going to give you two examples that took place today. And of course, I didn't do a very good job of executing it today, but I will tomorrow. I'm just going to have to put this to the top of the priority list. But let's get to it, right? So if you look, this is on an 8-range chart on NQ, right? And if you look, so this works on a 5-minute, a 15-minute, an 8-range chart, a weekly chart, a daily chart, anywhere where you can draw if you can draw a swing, and that's the swing to the high, that's literally what the swing to the high does. Now, these waves kind of help me technically lay out exactly where they are, and they tell me a lot about the strength of the wave and whether the wave was divergent or not divergent, but you don't even need it for this particular concept and this important concept. This was the high, so this became the wave to the high. So there's important concepts to it. So in that wave to the high, if you'll look, what's obvious here is that, and you have to start slowly with the concept, right? So I like things called orthodox close. I'm going to give you the definition of that term. An orthodox close means a negative bar that closes underneath that has no physical contact with that whatever we're measuring against, right? So in this case, it's the wave. So in this case, it's this bar right here. This is the first orthodox close underneath. Now, when it comes to waves, very, 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 very important. I can't stress it enough. It's the second close underneath the wave that is the most important. It's what gives you the larger push. Now, if you're going to build a model for trading, right, what you would do is you would skip the first close underneath the wave and always look for the second close underneath, because the second close has the biggest push. Now, in practice, that's challenging to do because people tend to be people and they want trading action. And you have this fear of FOMO. And when you look at it, you can clearly see there was a pretty decent trade that could have been taken right here to the downside. But the bigger trade, the trade that paid, was the move underneath, right? So let's go look at where that move up began. We're going to come all the way back to Monday, right? So on Monday, so there's also, let me make a few more divisions there. There's the actual swing low, which was all the way down here, right? But we're day traders, right? So we kind of have to reset everything appropriately to how we see things. So if you look, right? So if you look, when if we came into the day on 6/11 on Friday, right, you would have said, well, wow, this is the push. So this is a little bit tricky, right? This looks like the push of the high, but it's actually this wave right here. This, why? Because it made a new high up here. So that became the new wave to the high. So if you look, this became close number, wow, let's get a line underneath that. Let's see if we can do that. So it's a perfect example of where you get a close underneath. This would be the second close underneath that wave to a high, right? And sometimes you're going to have the market give you pretty funky readings. For example, technically, this is your wave in that same session. So look at it this way. This is your wave to the high. And so first go look and see if it followed the rule, right? So orthodox close number 1, orthodox close number 2. Did it go profitable? Yes. Did it go, well, it actually went down pretty significantly after that second close now that I look at it, right? So let's measure this. Do it one more time. I'm going to erase that so you can see that. Wave to the high, right? Orthodox close number 1. Orthodox push back, close back in. Orthodox close number 2. Gave a lot of noise before it finally rolled over, but it finally rolled down, right? When you look at this, this is also the wave to the low right here. So I'm gonna do a contrasting wave from here to here. That's the close to the low, right? That's the low of the day, 8:30 a.m. If you look at this wave, see how it never got a close? See how none of these bars gave an orthodox close above this wave? So it never triggered long, right? I'm not saying there wasn't a long from down here. If you could have engineered it, I've got no problem with it. But to be clear, there never was an orthodox close above this wave to the low to trigger the long side trade, right? If you progress through the day, right? Let's erase all this. And you look as we came into the low. Give me 1 second. It's my wife. I got to take that call. I'll be right back. Okay, guys. So hopefully I picked back up. I had to take that. Took a little bit of time. But see this push down. So we already discussed the push to the high, right? So see down in the push to the low. This, right? So it's always based on whatever the market's doing, but that's the push to the low, right? So it's this wave right here. So you don't know what's going to happen off to the left. So that's key when you're practicing it. When you're practicing this, it's key to go, okay, if this is the push to the low, right? So that's a piece of information right there, right? It's push to the low. This, so now you're going to have to make a trading plan that goes with it. This is the first close, orthodox close above. We can already see that it didn't take off right away. So let's just go bar by bar, right? Okay, this is the second orthodox close above right here, right? So when you're making a trading plan based on any idea that I introduced, right? The first one part of the decision making is the risk, how much you're going to risk, right? The other part is how is it going to move? So in an ideal world, we just take this trade here and it would never get underneath here, right? This would be like the perfect place for it to go, right? So let's see what happens. Okay, now as you can see there, if you had bought here on this bar, it did go to profit, right? So if you took it here, it would have been, you would have had roughly a 64 entry. It moved from 64 to 76. That's 20 points. This move, that's $400 a contract. So you got to understand, whenever you're making a trading decision, there's so many overlapping decisions to come into play, right? Like, for example, from that move, I would think, hey, can we go out and take out, like my goal would be, can we take out all the highs over here, right? And you're going to have to balance that between, you're going to have to adjust your time frame, right? If we play this out, let's see how it played out. Let's say we just held it. It makes a significant move higher, right? So let's discuss this for a second. If you entered here and you put your stop on this bar, it went to profit. You either could have closed it all out here if you magically could have gotten the perfect entry, right? But the reality of what you have to know is that once you get that second close above, it's going to have a high likelihood of a push, just like we did over here when you back over to the left from the push to the high, wherever that was earlier. I guess it was over here. Once you got the second close underneath the push to the high here, I guess it would have been this, right? You're going to get those extensions down. I apologize because I had a 15-minute call in between finishing the first part and the second part. The important part to know here, right? So the first part of structures, you go, the first thing I know when I get a second close above. So now you have to go train yourself how to do that, right? If you're looking on this chart, like for example, we'll just keep going to the left. This was the next push to the high, then this was the next push to the high, right? Which means I can I'm going to erase everything now. I'm going to make the assumption that this was the push to the high right here. Okay, this is close number one of the push to the high. Now, you got to go through everything that's going to go through your mind. Oh, wow, it's going to break. Or is it going to break? Or do I take that trade, right? Or do I wait for the second close? If you want the higher odds trade, you wait for the second close. So just keep going. Okay, now stop for a second. A lot of people will look at this trade and go, oh, that was the first break underneath. I should have taken that, right? They're going to go, I should have taken that trade, right? I'm telling you, if you'll focus on the second close underneath, you'll have a higher win rate. So let's see if it ever came back for a second opportunity. There's your close back in, right? Remember, this is the wave to the high. See if you get a next close underneath. Let's go watch. This is the second close underneath. This wave to the high. This wave never made a new high. So let's see what happens when we take this bar. This is how you practice. Now, you may want to fine tune to get your exact entry in, but let's go see what happens. And I can already tell you that if this had been my entry, right, see how much time has passed? There's no way I would have stayed in this trade. No matter what the outcome is of this trade, once it did this, and then once it did this on the backside test, if it came back for another backside test, I'd be out, right? It's just taking too long. It should look like this on the second break. They should really want to get out of that trade. My guess is they're going to push it back to the upside. Let's see what they ended up doing. And it ends up taking out the high, right? And if you look, so now we would adjust, right? So if you took this trade, if you took the second close underneath, right? You got to count on the fact that it'll backside test because it does it often. As a matter of fact, the higher odds entries, if it gets a second close underneath, you limit your entry at the bottom of the wave and try to get that extension down. So you would have made some money on the trade, probably about 20 to 30 points of P&L. This is an 8-range chart. So 20 to 30 points of P&L is available, but it never gave you the flush to the downside. And the reason for that was it gave you that huge impulse off the bottom. So you have to keep adding pieces in. And I'll cover the 50-60s later, but this was going to slam right into your 50-60 retrace. And that's why it couldn't go any lower, right? So the trade technically worked, but you were going to have to beat that 50-60. What would have been better, the way I would have liked to see this structured, is you get the first close underneath, then it quickly comes back, quickly comes back for that push back in, then comes out and gives you that quick roll to the downside. This is a harder way to make that trade work because this is such a huge impulse move back in. Now let's keep going over here. I'm going to give one more example and then I'm going to go to bed because it's late. All right, so as you're pushing along, so you stop there. This has now become the push to the high right here. As of now, this is what has to get below. So let's just follow how it goes. Okay, never sets up short, so you never get run over, right? And then you can see it makes that next massive move up. Another move up. We'll just keep going until we finally find it. Right now, the move to the high is here. Never made a new high. So hold on a sec. Close number one underneath. Now what I want to happen here is a backside test, then a roll to the downside. Doesn't happen here. Let's hope it comes back up. Okay, there's entry number two. Now I'm looking for close number two, right? Oh, here's my short. What I really want here is a backside test right there. Let's see what will happen. Here's my backside test. And you can see that we fall away quite nicely. You can see from that second close underneath, gave you the backside test. And then from that 14,104 down to 14,050, gave you 50 points, right? Even if you didn't get the further extension, let's see how that worked out. We still don't have the push to the low for the reversal. New push to the low, new push to the low, new push to the low. Stop. This is your push to the low now, right here. Right? Close number one. I'm going to wait for number two. Not yet. Not yet. Technically, it's that little bar right on the close, believe it or not. So none of us would have gotten it, at least anyone in this room. But it would have been this bar, and you're hoping for a backside test right to that 14,028. There's the backside test. Oh, and that's where we are this evening. So I stand corrected. That's where we're coming off of right now into Asia. If you'll practice that process, so Brenda was asking if I could kind of go through the symbols and the signals. I'm going to do that. But this is a very important concept of marking the wave to the low or the wave to the high. And specifically, what I think is the highest odds trade is once you get above it, you wait for the close back in, you get the second close above, you hope for the backside test, and that should pay you fairly significantly on a regular basis. It has a very high win rate, it has a great risk reward. The entry there, I'll go into more detail. I was going to do a second video, but I'm just beat. I'm not going to be able to do a second one tonight, and I haven't done any of my charts for tomorrow. But I think that's a good step A. So that's what I would work on. And doesn't matter whether you're in the room or out of the room, have an edge. Make sure you know how to develop that edge and what it looks like. And I'm telling you, the second time above a wave, you just got to be ready to go. I'm going to make, actually, just to reemphasize this, I'm going to go back a little ways. Right, so this is a long, long chart. Right, so this is way back on the 7th. I can't tell. We'll find out here in a second. Of January, right? Way back, right? And we can do the exact same process, right? So right now, this is the wave to the low. It's what you got to get above. So you're hoping you get a smaller wave. I know I said I was going to wrap it up, but I think I need to do one more example, right? Smaller wave. And then when you come through here, this ends up being the wave to the low. And technically, according to this, it's this right here. I would actually say it's this. Normally, there's a smaller wave within there. So the computer saying the wave is this, I just think there's a lot of noise in there. But the computer says it is the wave to the low is right here. Computer saying this is the wave to the low here. All right. And so you can look, this would be close number one, came back in, right? This would be close number two. You can see that backside test. That's why I like it when there's a fractal on top there. That's what I would call the wave right there. That's what I want it to look like. So let's see how this works out. See how it never could get above that point? That's what I would have said would have been the wave, so it's a little subjective. And then let's see where it did turn here. This looks like it's going to turn into a trend day down. We want a new low. There's our new low. There's another new low. Stop. So this, I would say, is your wave to the low. And then if you want to get really technical, there's a smaller wave within a wave right there. Right? So let's just see how it handled those two things. There's the close back in. I want the orthodox close above. Okay. This is your, so if you look off that little bottom wave here. Okay, so see how it went fractal bar fractal there, right here? First orthodox close above. Closes back in. This bar had contact, so this is the second bar. So let's just see what happens. I go long on that bar. Let's just see, find out what happens to us. I think eventually we would get stopped here. This is obviously very, very fast market there, right? But if you look at this concept, right, even from here where you entered, that means that your entry came off that second level there, right, was 13,244, and it rolled you up to 67. Again, about 20 points is where your first scale should be, right, in terms of getting your risk off. And then, obviously, this is still an important level, right, because they can't get above. So if we watch, so that made a new push to a new low. So now you have to start over the process, right? So you erase everything. It's harder when it's faster because you have to keep redrawing everything. This, that is now my wave to the low. This is my first close above. I want a second close above, right? So here it comes back in. Wow, that would be a hard judgment call. Secondly, technically that's the second close above because this bar closed back in. So since I'm aggressive, let's say I would have taken that trade. And then you just go find out what would have happened to you. And you got stopped, right? And that's okay. That's part of the process, right? Really what's going to go on here is this was so volatile that you had to so if you look at the way this worked in here, this is so volatile. This became your move to the low, right here. This wave right here became the move to the low. It got above, and it never gave you a second chance on this. And what we needed to do is probably be on a 10 range bar instead of an 8 range bar. If you'll move over most of the time, like in this environment here, like you can tell the pace is just slowed down. You can just see from the overnight, right? So technically, when you look here, this is the wave to the low right here. See this? That fractal is the last fractal. That's the wave to the low. I like to measure fractal to fractal with the low. I'm going to call that the last move down, right? So when you look, this bar right here, and I was a little bit sloppy, but technically, because the top of the wave would be in a little bit. Let me move this really quick. Right there. So because you put that right there, this bar becomes the first close above. This becomes the second close above, and you can see that they lifted massively. And it was a good trade. Right? So generally speaking, with that exception of the hyper volatility, the second close above a wave, right? And generally you can measure it fractal to fractal as the push into the low, wherever the last fractal was, down to the fractal at the bottom, meaning you have a little triangle. This is what I'm calling a fractal. The little orange triangles on top, little orange triangles on bottom. This is what has to get beat. First time it generally fails. Second time, the rule of thumb, is that it generally pushes out. And when it's perfect, by the way, it looks just like this. This is the breakout bar, never comes back, and it jets. And you can just leave your stop right underneath that bar. And about 50% of the time when you get this bar, probably 60 to 70% of the time it's going to move to profit. And about 50% of the time that stop's never going to get violated. And it's going to give you one of these massive pushes like this to the upside. And that's why it's so valuable. Anyways, my name is Simon. I'm a Trade and Perform coaching. This went a lot longer than I thought, and I got interrupted by a phone call. Brenda, I hope this helps you and anyone else that's out there. This is how you make money, right, guys? It's not glamorous. It's hard work, but that's where the money is. So anyways, I have another video. I'm probably going to do it in the morning. I'll cover it with you guys in the morning, and I will talk to y'all later. Have a good night.